pretty much, or because of the SEBI disclosures, we know what you own. So I won't start with what you own, but let's start with what the others own. Given that there is a wave of selling in emerging markets, do you think some of the FI dominated stocks could remain under pressure and markets should remain wary of them?
Good morning, Nikunj. I think it's very difficult to generalize saying that all the FII held stocks will be under some pressure, because at the end of the day, all investors will take decisions based on the future expectations of growth and how they are expected to make money in a particular stock. So I wouldn't hazard a guess saying that there are specific pockets where the selling could be more intense than other pockets. Having said that, I think market continues to have macro headwinds. I think we have spoken and debated a lot about currency depreciation, crude oil moving up, interest rates moving up. So in the light of all these headwinds, definitely the bias is on the negative side, especially given the fact that the valuation still continue to remain elevated and or above average on a historical basis as well.
So Harsha, what's the right approach in this market? Do you actually take stock of your portfolio? Do you profit take from where you've made money, buy more of the same in this decline, or bet on newer horses? Because when the market believes or rather recovers, you believe that maybe it's the cyclicals that you should bet on this time, because maybe that's where there's bigger gains to be made.
Portfolio monitoring and review is a continuous exercise. I don't think that you can avoid at any point of time. So we continue to do that as well. As far as we are concerned, we are very careful in terms of stocks where we see headwinds coming in the form of currency hit or margin pressure, etc. over the next 1-2 quarters. If we find that any of the stocks in our portfolio have some of those headwinds and which are likely to materialize, then obviously we will take a negative view on some of those stocks. And also we will keep an eye on valuations at all points of time, and as valuations increase, we may try to book profits in some segments. Having said all this, I think it's been a challenging market. It's not been an easy choice between likely winners and likely losers, because across the board the valuations have been on the higher side. So if you take just a valuation call, most of the sectors would be a sell at this point of time, but I don't think you can just go on an absolute valuation and take those calls. On a relative basis, again, you will have to pick up stocks and sectors, and that's what we have been doing. So over the last 6 months or so, we have increased our defensive bias in our portfolios. So hopefully in these challenging times, that defensive bias will help us.
Does the list, Harsha, extend anywhere beyond the IT pharma space, or is that the only concentrated bet that you're taking for the last 2 months?
So apart from the known exporting businesses, we also have investments into cement, which is completely immune to what's happening globally. For example, the entire production is in India, entire sales happens in India. There are no foreign exchange linkages to that sector. So in a way, it is quite insulated from what's happening elsewhere. There are also businesses which are dollar denominated in terms of profitability. So those are the other businesses where we can look at hedging some of our portfolio. So it is going to be a combination of some of these sectors and stocks. And at the same time, we are not selling out of domestic businesses completely. That is where I think the demand momentum is quite strong. And we continue to believe that India from a longer term perspective continues to be a great story. And we will be investing into some of these stocks in our portfolio.
Rupee and oil, Harsha? I mean, I know these are the only two talking points, variables in the market. How, as a portfolio manager, are you managing these two variables into your, essentially mitigating the risk that may come to your portfolio on account of the movement?
Clearly, as far as oil is concerned, we had a view that it's going to firm up during the year, and accordingly, we sold out of most of our oil marketing companies. Although the concern then was government at some point of time may change the pricing policy, and hence the profitability of oil marketing companies would come under a cloud. That has not happened, but the nervousness still continues, and hence the stocks have not really performed during this year. So to an extent, we were fortunate enough to get out of most of the oil marketing companies' position that we held in our portfolios. So oil per se has not really impacted our portfolio in that sense, but obviously oil also has other cascading impact which would have an impact on the portfolio.